Well, today's focus will be on equities market growth, stock markets review, and amongst others. Well, the month of September started with low trade as across various market sectors of the exchange. Well, the trade weekend weakness was a carryover for the other month. That's talking about August, when investors became more sensitive to political activities in the larger society. With less appetite to picking equities and bonds, market indicators dipped continuously. Early trade on Monday, the index measuring price movement hit nearly 3%. But Dangote Cement brought in its weight in mid-trade, which then beefed up stock prices. With the poor start of the month, many analysts say it's a pointer to what may show in the market in the coming months. Well, to put this into perspective, to discuss this, the growth sentiments at the stock exchange, I have live on the studio Babatunde Dada is the Chief Executive Officer of Anchoria Investment and Securities Limited. Thank you for joining us.
Thank you very much.
Yeah, I'm going to start just like what I read earlier, talking about what the trend at the capital market at the moment. Give us your opinion of trade at this, as we move to this third quarter.
Well, as you mentioned, you are correct that we've been witnessing a bearish sentiment in the market, in the last quarter or thereabout. And I think this is likely to continue going into the next quarter. I mean, because of all the factors that shape investors and trade sentiments. So we talk about the political situation in the country. Obviously with all that is going on for now, that would affect the way investors make their decisions. Also, more importantly, the economic indicators. So the GDP figures are not great at the moment. Even what happens in the more advanced markets is a reflection of our local economy here. So the sentiment towards emerging markets right now too is not great, especially with the trade wars between China and USA. That also reflects on us. So I mean, all these things combined together, and most importantly, the companies, their results are not too impressive as well. So all this together, doesn't bode well for the next few months.
That's really well. With the general downgrading of securities, what about investors? Are they responding in a positive manner to all of this sentiment?
No, naturally, investors don't respond positively to such sentiments. So we are seeing a lot of sell-offs. But on the contrary, for a more discerning investor, this might be a good time. If the fundamentals still remain right, then it's still a good time to buy. Because stocks are cheaper for you, so it might still be a good time for the discerning investor. But typically, what you find is that most investors, just follow the herd and go and sell off immediately.
And that's when they now move funds out of the country. I'm talking about FPIs now that is even affecting our reserves at the moment. We have a drop because of this movement of funds. Most of this investors, this word of sitting on the fence, is that what they do at this kind of time when there's uncertainty at the market?
Yeah, I mean, sitting on the fence is not a bad idea in itself.
To be safe, right?
To be safe, yeah. I mean, no one wants to lose money, so you take out your money from more risky assets and you put it in something more conservative or less risky. That's what most investors do.
Let's go to the fixed income market now. There are many of them, all around. Are investors showing preference to talking about fixed income at this time?
Well, right now, even the fixed income market too is experiencing a bit of a flat or bearish situation too. So there isn't much movement or activity there as well. But I mean, obviously that's because the yields have gone up, but prices are not encouraging. So there's not much activity in that area as well. But over the last few years, we've seen more preference for fixed income. So you have a lot of retail investors who just want safety of their investments, their funds. So they'll rather just place their money and receive their interest steadily rather than the ups and downs of equities.
As bad as this may be, some sectors will still remain attractive. I know, following the trend, I've known that the banking stocks have been doing very well, talking about banking sector. But tell us, what other sectors, at least even as bad as it is, some will still take advantage, like you said, because they will get the stocks cheap at this time.
Yeah, I mean, well, the banking sector is definitely always one. You know, even when you look at some of the banks, you know, they've done pretty well this year in terms of their year-to-date performance. I mean, typically, I think as a rule of thumb, the NSE 30,
Okay.
you know, is a good guide to where to, you know, select from, because that's the 30, shall I say, I mean, there's a criteria
Okay.
for selecting stocks into the NSE 30, you know, based on weighting system, you know, so that's a good avenue to start. I'll have said consumer goods, but even that right now, you know, some of them are not performing too well, just because it's a reflection of the economy. You know, there's not much money, you know, so people are not consuming too much. So even some of those companies are not doing too well. So, I mean, I'll say you know, right now, I think the banking sector group is really the one that is performing very well. And that's where I'll probably direct people to, you know.
To shift focus to.
Exactly.
One way or the other, we can't rule out economic situations with trading at the stock exchange and even businesses generally, because as we move into an election year, a lot of expectations, everybody believes that a lot of things will come up. What effect do you think this will have? Or maybe talking about even we as the media, because what we report is what people get to listen to at home and to know if I could put my money here or not to put my money here, what is really happening. What do you think? What effect do you think this will have as we move to an election here?
Yeah, so it's very important that the media report, you know, responsibly and correctly, because the media shapes the minds of a lot of people. So imagine opening the newspaper and you just see, Nigerian Stock Exchange loses 10%, 30 billion.
Well, it's possible maybe that's what happened on that day.
Well, I guess it's the way it's, you know, it's reported.
It's being reported.
It's being reported, you know. So, I mean, because these things happen, you know, markets go up and down. But it's knowing the long-term view and perspective that it's a zero-sum game. You know, money lost is not that somebody has stolen the money or taken the money anywhere. You know, the same way it was lost in a day, it could gain back the following day. You know, all you just need is a few days of good, you know, successive appreciation in prices. You know, so yeah, it's just really just staying put, watching the fundamentals, and not just studying, you know, the short-term movements and drawing your conclusions based on that.
Well, let's look at new listings. They are near absent at the stock exchange at this time at the market. Now, what is the missing link that's actually discouraging upcoming companies to approach the exchange for listing?
I think, simply put, it's really because no company wants to fail if it goes to list. You know, so, and you know, the last 5 years hasn't been great. You know, even when we've had not new listings, but when companies have come to the floor for, you know, additional shares, even that hasn't been too impressive. I mean, we've had a few late last year, and that coincided with when the market started rising. But when the market is bearish, you know, it's not a good time for companies to, you know, to want to list, you know, simply because they don't want to fail, because it's a poor reflection on them. Okay. You know, so they rather seek alternative ways. You know, so we've seen a lot of activity at the FMDQ market, you know, which is a debt market, and a lot of companies are actually raising alternative forms of financing from there.
What about issues around bonds? I just want us to touch it. The government has been raising bonds too lately, the FGM bonds, green bonds, and all of that. To a layman on the streets, what impact, what positives would this bring? Like, and as an act of savings, I know one way or the other, but you know.
Yeah, I mean, it's a two-way thing. Obviously, for the government or even the institutions. So it's not just government that raises bonds, but even institutions, you know, institutions. It's a way of just raising money. It also increases their profile. And for the person loaning the money, obviously, you know, a bond has to be rated. So if you're investing in a highly rated bond, at least you know that you have safety of your capital, number one, and you are guaranteed the constant interest repayments that are paid to you, and at the end of it, you know, you're getting your capital back. So, I mean, I think for people, it's in the alternative of investing in stocks, you know, bonds is the next alternative, you know, as far as securities are concerned.
Now let's look at investors' confidence in all of this, because many used to say that investors' confidence is yet to return to Nigeria after all of the challenges we faced. As it is now, what would you say about that?
Well, it will definitely take a while. You know, if you look at the famous 1929 crash of Wall Street, it took a generation for even confidence to return there. You know, so right now regulators are doing the right thing. You know, the SEC, Stock Exchange, even FMDQ, and all the other exchanges that we have. You know, they are doing a lot of work to try and build confidence, but it will take time because a lot of people, you know, got burnt in, you know, in '09. You know, so, and this is just, it's not even up to 10 years later. You know, so it will take some time, but I think gradually it will happen if we have, you know, quality results from companies. You know, companies also need to play their part, you know, because I'm not going to invest in a company simply because I should invest. You know, the fundamentals, the performance, you know, I'll study the books of the company and I have to see elements of growth and, you know, strong management and leadership. You know, all those things matter. You know, so those are things that also, you know, breed confidence.
So are you looking at any form of rebound if this negativity? Because I would say there's a little bit of negatives. We've been having a lot of negatives. Now, can there be any twists? Can there be a change to that? Like, there was a time I know that we reported our market was the best market. I think, you know, that report came out and we're all happy. Are we going to get to that kind of time again where our stock market will really be up there?
Yeah, definitely we can, and hopefully we will.
The market goes up, and the market also comes down. So how do we
sustain more of an up?
Yeah, more of the up.
That's a tough question. I wouldn't know how to. I mean, I think it's just a question of, I think, well, one thing I advocate for is we need more local participation.
Great.
Because if you look at what drives the up and down is due to the FPIs, the foreign portfolio guys that you mentioned, you know, who can come in and exit at ease.
At any time.
You know, but if more Nigerians are involved in the market, the domestic investors, both retail, you know, pension funds, and so on and so forth, we'll see less of that. You know, that sort of volatility, because, you know, the foreigners, once they sense any form of instability, political tensions, and so on and so forth, you know, they react quickly and start to move out. And then that puts pressure on the markets.
And also with the central bank and other agencies too, rates and some of these decisions by like the MPCs and all of that, they also have effect on trading at the capital market. What do you think?
Oh yeah, surely they do. I mean, typically there's an inverse relationship between interest rates,
inflation, and all of these things.
So all those things matter. So it's a balancing act from the CBN trying to manage, you know, all these variables.
It's a big one. Let's take a break. Let's take a break now, and we'll return and we'll continue to discuss more on this. Stay with us. It's Business Nigeria. All right, thank you for staying tuned. I still have the Chief Executive Officer of Anchoria Investment and Securities Limited here, Babatunde Dada. We've been looking at issues around equities, market, stocks, amongst others. Now, feelers, we're crossing to the stock exchange shortly. Yusuf is standing by, but feelers that I got is that it's on the positive side, 0.22% for today. That's really a good one.
Yeah, it's encouraging. Yeah.
What would you think? What would you think happened? Because some major players in that market, when anything happens to them, there's a change. But when I don't get it.
Yeah, I mean, you're right. You know, if you look at the capitalization of the market, you see that some certain companies carry a major weight of the market. But you know, before leaving the office, none of those guys were really the top movers today. It was really I think the banks were, you know, really responsible. You know, First Bank, I think Zenith GTB, you know. So, and you know, it's just how it happens naturally. I guess if the prices have reached a certain level, you know, people start taking position today. So, you know, there are more people buying today than they are selling.
And they're selling. All right, let's leave it at that. Chief Executive Officer, Anchoria Investment Securities Limited, Babatunde Dada. Thank you very much for sharing your thoughts with us today on Business Nigeria.
Thank you very much.
Let's move straight.